Hey everyone, welcome to Fiscal Voyage. My name is Felix, and today's video we're going to talk about undervalued dividend growth stock that's yielding over 4%. This company is in the advertising industry, which is very big, especially with the internet marketing industry and overall marketing. This company 4% yield is on a support level, so we're going to look at technical analysis as well as the metrics for fundamental analysis of this company and to determine if it's a good buying opportunity at today's price. But before we get started, if you're new to the channel, make sure you hit that like button and subscribe to the channel as well. Okay, so Omni Group Inc., ticker symbol OMC, going for $69.60. This stock, as you can see, has a dividend yield of 4.05 and a market cap at $14.6 billion. With a current PE of only 11, so that's a good indicator already that it looks to be undervalued. Anytime a high quality company such as Omnicom is lower than a 15 PE or a 20 PE, depending on the historic average, tends to be a good indicator that it may be undervalued. And now we're going to determine the valuation with different metrics as well as the technical analysis of the stock. So let's go look at fast graphs. You can see here Omnicom Group has some years where they had earnings drop. For example, in 2008, 2009, earnings dropped 20% from 317 to 253. And in 2020, the COVID year, it dropped from 606 to 505, which represent almost 20% at 17% drop. However, estimates are expected to grow 24% based on last year earnings of $5.05 to this year expected earnings of $6.24. So that's what's giving this stock a low PE ratio with also the price pullback. And we're going to look at that in the technical analysis portion of this video. But you can see mostly the stock earnings tends to be in an uptrend. If we remove the price, this is what values the company. This is right here is the most important thing of a company you want to invest in, that earnings are continuing to grow, because eventually price follows earnings. So price has a big fluctuations, and what that does is presents us with opportunities. We first determine the company quality, and then we look for price for the opportunity to find it at a undervaluation price. And you can see here, whenever price is under the orange line, is a decent indicator that it's undervalued. So it is undervalued here based on the fast graph with a normal multiple of around 17.7. So this stock should be valued at around $110. And we're gonna look at Morningstar to see what they evaluated there. So a normal multiple of 17, PE of 17, you get a price around $110 to $100. So we have a good price undervaluation based on the fast graph. You can have a potential return of 33.3% in the next few years. So that's outstanding with the high yield of 4.05. Blended adjusted earning yields, would I like to see this at 6.5%, 7% or higher. We have almost a 9% at 8.78%. So another good indicator. This is a solid earnings total return candidate here. S&P credit rating of BBB plus, which is really good, and a 65% long-term debt to cap ratio. So we look at the free cash flow, because if you want to be a dividend growth investor, the company has to be able to pay the dividend and continue to grow the dividend, because without that, you're not a dividend investor. You just kind of winging it and trying to find growth stocks or stuff like that. But Omnicom, you can see here, free cash flow covers the dividend very, very well. And actually, the payout ratio is only around, 37% maybe? If I can move this here, more or less 37%. But overall, you can see here, the free cash flow covers the dividend very nicely. So if we go to Morningstar, you can see Morningstar has a 4-star rating out of 5. So that means it's a good buy stock based on their rating metrics. So some of the things I like here, you can see here, it has a current price of $69.60, and they have a fair price around $90. So it's more or less, it's lower than the fast graph, which had around $100, $110, but it's still up there in that $90 to $110 range. So it's a good, about $20 or $30 potential of return there. Other things I like to look at is the financial health. You can see here interest coverage of 9.18, which is really good, and a debt to equity of 1.9. So they are highly indebted, but it's not too bad. A 1.9 I like to see as a 1.5 and lower, but overall 1.9 is not bad for the end. Is a triple B plus credit rating, so overall it's good. Other valuation metrics that I like to look at here is the price to sales. You can see at 1.05, much lower than the 5-year average of 1.11. Price to earnings lower as well versus the 5-year average. Price to cash flow is lower than the 5-year average, almost 100% lower. And the price to book at 4.50, lower than the 5-year average. So those are all good valuation indicator that this company is undervalued based on these metrics. And now we look at the technical analysis of Omnicom here. This is the monthly chart up here in the top left and the weekly chart on the bottom left. And these two are the daily charts. You can see here the company has had a pullback over here on the monthly chart for the past few months. You can see 1, 2, 3, 4, 5, 6, 7, basically almost 8 months of a down. And why did it come down? Because you can see here at $86, it had resistance over here. It as high as 89. You had topping tails over here at what's that, 83. You had topping tail over here at 84 and topping tail here at 85, and then it hit as high as 86.38. So support and resistance is an area. So this right here is the area of resistance. So a lot of sellers are up here. So this is what caused the price to drop for the past few months. But what we're getting now is support. We're coming into support area around the $65 range. So you can see here, you have a bottoming tail at $64 here. You have another bottoming tail at $64.12. A bottoming tail here is $65.32. Some more support here. So this is a good indicator that this company is from the high of $86 came all the way down to $66 into a support area range. So this is a good indicator that buyers have been stepping up. They stepped up here, 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 and here. And obviously this is the coronavirus drop, so no support was gonna stop that. It actually did ended up hitting support area over here. You can see here what was once resistance comes support. So eventually when this stock breaks out of the 86 area and maybe hit to 100, it'll probably come back down to that area, the $86, and then continue higher as time progresses, obviously. But overall, you can see here, I think now at the $86 range, $68 range, $69 range is a good buying opportunity because buyers have been stepping up. If you see here, this is a weekly chart, and you can see the big bottoming tail. A big bottoming tail indicates that this was once a big red candle, but buyers stepped up and took it higher. So that's something that I like to see there. So this is why I think Omnicom is a good company that you should definitely research into. And as a company that I personally own shares, I'm up a few percentage points because I bought it in around this price range. And if it continues to go lower, actually, I have this alert at $64.88. If it gets to that price, I'm gonna add some more shares. But for those of you who don't own shares of Omnicom or own shares at a higher price point, I think at current price range around $69 or under $70 is a good opportunity to buy more shares of this company. So overall, I like Omnicom at today's price. Triple B plus credit rating, great payout ratio, great dividend yield at over 4%. Free cash flow covers the dividend very nicely. And overall, solid company, is in the advertising industry, and advertising is not going anywhere. As you see, everywhere you go is advertising. So overall, I like this company and I consider it as a buy at today's price.